Hello everyone. Today let's have discussion on the buffet ratio. So this is one indicator that is being used after Warren Buffett suggested that how he looks at the complete market. So if you have to look at the complete market situation, this one ratio is very helpful. So this is nothing but market cap to GDP. Now to look at this, I have taken this graph wherein it explains neatly about how this ratio has been and how it has fared in last 20 years. So basically, what market cap to GDP is, for this in this context, they have taken the NSE listed companies against the GDP. So from 2005 to financial year 24, this is last 20 years data, and over here there are these two lines, this pink and black. If you see this line and this black line, and this orange is the market cap to GDP ratio or the percentage. Now the percentage are given on the right hand side on the y axis, and on the left hand side are the market cap lakh in the lakh crores range. So this so for example, for financial year 2006, the market cap would be around 35 or 40 lakhs crore, and now it's presently at 450 lakh crore, and the present numbers are less, but this diagram, I can say, is from like from November. Okay, so how the Indian market is doing, this ratio is very helpful. Now, interesting thing over here to note is, look at this point over here. So if you see, around 2008, market had reached the highest market cap to GDP ratio, which was around 110 or 115, we can say, and then it went down to around 50. In the same year, it went from 110 to 50, and afterwards it remained basically in this range of this 100 or 60. Okay, but then there was sudden shift at this point, that is for year 21. There has been shift in this trend, and it is constantly trading above 100, and at present it is at 147. So what can we learn from this market cap to GDP ratio? So basically, this shows the valuation pattern for the complete listed companies against the GDP, and it gives us a view how overall market is valued. So uh, what you say, the annual meetings, he had suggested this ratio, and since then this has been very popularly used by many people. So he used to look at it like anything above 100, he used to say that's highly overvalued, and anything below 100 is undervalued. But then we can base our this like we can have our own assumptions and things over here. So for example, this shift has come in last 5 years, we can say, from year 21. So for these last 5 years, we can say average would be around 110, but then even this average has crossed this year, or you can say year 24. So overall these valuations look very high, and if you look at the earlier patterns, this was trading in a very good range, just from 60 to 100, and now it has shoot up to 147. So there can be fall that can be assumed, or maybe it may sustain these levels, we don't know, but this can be a good reference point as to how market is doing, and you can base your investments. This can help you for the equity and the mutual fund investments also. Okay, now another interesting thing I want to share with you is about this graph. So here it is basically on x-axis, these are the years, and here basically all the indices they have distributed is as to how what is the percentage of each indices. So for a Nifty 50, they have given a blue color, Then for next Nifty, next 50, they have given orange, and so on and so forth. So basically, you can say this is mid cap, this is small cap, and this is over here, this is micro cap. Okay. And blue one is, as you know, is the large cap. Now, one interesting thing for from this data is look at the large cap percentages. So if you look from 2011, this is 54, 57, 60, 62. 62 is the highest that it has reached. Okay, over here you can say. But then this range has been somewhat above 50. But then in this year, this range has broken. Okay, so this five graphs over here for March 21, March 24, August 24, this has decreased from 53 to 60, 46, then 43, and now for November it was 43. So this is a very big percentage that this large cap has dropped. So overall, we can say most of the valuations that we see in the market cap to GDP, those have come from this part, from the micro cap. Okay, so micro cap is also there, and also this mid cap section is also quite enlarged. So this is also one striking thing that I think you should keep in mind. And even uh, from the mutual funds perspective, maybe you can stop some SIPs for a small cap and mid cap for a few months till the time this ratio gets settled, because this is historically these numbers are not seen. So look at this orange. So it had never gone above 15.4, but now it is around 18, 17.1. Similarly, on the other mid cap section, you can see it was 17.3 that we had seen those range, but now it's at 18.9 or 18.8. So overall, the main chunk of the valuation or the increase in the valuation has come from this part, that is not from the large cap. So this is a warning sign, we can say. But yeah, like, I thought this would be a good discussion on how the market is at present. Do your own due diligence before investing, and do take help of investment advisors. Do like, share, and subscribe to my channel. Thank you.